Hello again, everyone. In this technical analysis of the stock market weekend update video, we're going to take a look at the S&P 500 on a daily and weekly basis. One of my key indicators I look at, the equity put to call ratios. Check in on an update on the energy ETF, the XLE, and then check in on Twitter and Schlumberger, two stocks that we were in this week. All right, let's start off with the S&P 500. It's been 44 days since we've had any kind of compression close to what we had on Friday. On Friday, the difference between the high and low, the trading range on Friday on the S&P 500 was 10.32 points, okay? The last time we had this kind of compression, you got to go back 44 days to March 16th, where we had 11.88 was the compression of that trading range. Those are the two, 44 days apart. It's very interesting that we're coming off an intermediate wave 2 pullback, and then we came down reversal candle. We kind of stalled right above the 10-day moving average, and we got that compression, and then we broke down big time. Now we got a similar type of zigzag pattern so far. Come back up into this minor wave 2, the way I've got it labeled, and this point needs to hold for this wave count. Then we got the breakdown on Tuesday. We kind of just stalled in here a little bit right above the 10-day again and got this significant compression occurring on Friday. So now watching to see what happens after that. Let's take a look at the weekly chart real quick. We basically were down for the week, down 14 3/4 points. We're continuing to hold down here, pull back, and then a pullback below this 2-year trend line that was shattered here back in March. Actually, it was first shattered on the week ending February 9th, but then we got the significant close here on March, the week ending March 23rd. So we continue to trade below it, although we are kind of pulling back a little bit. So watching this coming week. The equity put to call ratio, let's take a quick look at that. On Friday, 66 puts for every 100 calls. Now, the market has a tendency to have a bullish bias to it. Okay, so that's why, when you look at this, you sit back and say, well, how come it's not like 10 puts for every 100 calls or something like that. You just don't get that kind of extreme. There's a tendency to have a lot of call buying. And so when you get down, and what we've noticed is when you get down into the 50s and then below that, you're getting into extreme readings on a daily. This is the 10-day moving average of it, okay? I highlighted in yellow. When it gets below 5.5 on the 10-day moving average, I highlighted in red. We haven't had a yellow reading in here like this 59. You got to go, when was the last time we had a yellow reading? Well, it was March 16th, 44 days ago. That date that I was just talking about on the S&P 500, that date right there is March 16th. And it's kind of interesting that that was the last time we had that kind of extreme. Now, again, this was just a one-day event, and it occurred at right after the peak of the bullishness as we pull back to intermediate wave 2. So here we are getting this bullish dose again as people are kind of ramping up a little bit of the bullish excitement, but it doesn't compare to what we had going into that January peak. Here's January 26th, where we had the peak of the market, and you can see how we were building since the end of November, okay, all throughout December, January, into that huge frenzy at the top of the peak of bullishness that was occurring. And this comes out of these statistics, come out of the Chicago Board of Options Exchange, and this focuses on equity put to calls only, stocks only. This does not include any indices put to call into the calculations. All right, that's it for that. Let's take a look at an update on the energy ETF XLE. So we continue to push. Here's last Friday. And so I would have been talking about how we've got this overhead resistance sitting up here at 78.5 dotted line, because we went to this twice and got significant selling kicking in. Well, then what happens on Thursday? We close above it and we're like, wow, okay, is this really going to go? Is it going to break through this? This almost looks like a trap in here a little bit, because this little pattern right here, this 2-day pattern, is what you call harami. It's a harami is the name of it. It means pregnant in Japanese, is my understanding. And it's has bearish implications, but you need the breakdown. You need to at least break the low here, I believe, 77. Some people think of breaking this low, but we're actually almost there. So I look for a break of this low at 77.76. And where have we seen a pattern like this recently this year? Let's go right back to the chart we were looking at right here. A beautiful harami pattern, just like what we've got on the XLE ETF. And so that's what we're staring at there. It could mean that the energy run has kind of run its course, at least for the time being. We'll see what happens this week. A couple of stocks we've been in this last week with for a couple of weeks actually with the insider members, and we had some unusual options trading on Twitter, call volume out in July 35s that we got into. And we had a nice little run up initially, and we're up 50%. So we exited half of our position at plus 50%. And then the next second half was going to be break even, or will it, let it run? Well, it turned out it pulled back some and we got back to break even on it. So we exited the second half of the trade. So we ended up with the entire trade being 25%. So a little disappointing, but I'm not going to complain about 25%. The other one that we are in is Schlumberger. And of course, this is related to the energy and the oil and the XLE and that type of thing. And we got into it here on the 7th and had a nice little explosion. We were looking for a continuation out of this pennant pattern. Here was the first leg up. I was looking for a second leg. Actually thought it might get above 76 or more. And you just never know. We exited the first half at plus 50%. So we've got that locked in. And the second half we're letting run. And we're currently up 179% on the second half. So we're going to see if it'll continue to trade or not and run. Or if this kind of pulls back down, then we'll get stopped out of this based on our trailing stop. All right, that's it for today. Hope you found that helpful. We'll see what kind of move this market is going to make after the kind of compression we saw on Friday. If you felt like the video was helpful, hit the like button. And if you're not a subscriber, subscribe to the YouTube channel. And if you could think of one person who would benefit from the video, share the video with them. If you want to get more insight, education, and trade ideas, click on the little image of me, my little face on the screen, and it'll take you over to the website at joehenches.net. All right, everyone, have a great weekend. We'll talk to you on the next video.